Good evening, traders. We hope you're doing great today. Welcome to our session. My name is Mathew. I'm here with my colleague Samson. Hi, Samson. How are you?
Hey,
Sam,
Matthew. Yeah,
you
hope you're
good?
good too. Yeah. We're having quite an interesting ton of events today.
Yeah. So we've been discussing about market analysis, trading strategies all along. Today we want to look at something different, the trading psychology, because mindset. Okay, apart from all other tools you have in trading, your mind is the biggest tool which you carry as a trader, because that's what you use to make your decisions. Yeah,
Yeah, that's
that's what
very
you
true.
use to
That's very
call
true.
out
Yeah,
your trades.
exactly.
Sure. So in that line, we're talking about the trading psychology or the mindset. And so why do we want to speak about trading psychology? Because you need to execute your trading with the right mindset. Okay. And in this conversation, we are going to follow through some 7 talking points. That is the growth mindset. Then look at how do you stay calm under pressure, the realistic expectations when you're trading, confidence, how resourceful you need to be, or resourcefulness, discipline, and patience. All these are aspects that contribute to your psychology. It's a very wide topic. We just picked a few pointers to align our conversation today. So when it comes to adopting a growth mindset, everyone has got a beginning. Everyone who is in trading, at some point you didn't know nothing, and then you started learning. Once you start learning, then it's more of one step leading to another. You know about the platforms, next you know about something, you know about analyzing the market, you know about strategy. And that one is growth. So the first point when you're talking about a growth mindset is where you believe that you can develop your trading skills over time with practice. First of all, you start by learning, then you practice, and through practice, you gain experience. A growth mindset. You're able to fuel your trading journey with commitment and motivation. Trading is not a 1 week affair or a 1 month affair or even 6 months. The longer you stay in it, the more experienced you get, the better trader you become. So you need to have a growth mindset, because realize traders face these challenges early enough when they're starting to learn trading, because you want to maybe become a professional so fast. So have a strong vision of success in your trading, such that you're consistent, you have a trading plan, seek mentorship, and you be better as you get old in it. And Sam, I think you have something to add. You can
Yeah.
tell us more about a growth mindset in this flow chart.
Yeah, I think you've started on the points quite clearly.
Mm-hmm.
And as you can see from the chart, the very first one is your current reality. So when someone comes to trading, they already have certain ideas about it. They already have a certain mindset and certain expectations around it. And this is the starting point of your trading. I can attest to this, that before you started trading, someone told you something about trading before we started. And
Mm-hmm.
that's what forms your current reality. And then what happens after that? You start exploring concepts. You go to YouTube videos, you go to speak to friends, and you start knowing different concepts. You start knowing that perhaps market structure is important, or psychology is important, or risk management is important. But all of these concepts are not very structured. And that's where the problem is. So there are pieces of information everywhere, because you're exploring the market and you're also exploring yourself. And then what happens is some people try to attempt to trade at this point, or you find a guru online and they tell you pay for this strategy, and you attempt to do that. Yeah. But at the same time, it doesn't really work. And most of the times you're still exploring the market. And then what you come to do is you realize there is more to trading than what meets the eye. And that's where you start synthesizing these concepts that you're learning separately. That comes to the third point, which is developing a trading model. So at that point, you're starting to understand the market in a deeper level. You're starting to understand maybe psychology. You spend more time on psychology. You start to spend more time on doing a deep study on each of those concepts. So there's market structure, there's indicators, all those concepts. So once you synthesize these concepts, then that's when you start realizing that there's it needs some certain time. Like there's a certain structure to things. You can't just get into the market just like that. And that's when you start internalizing these experiences, because when you're exploring the market, you think everything is straightforward and you're attempting to trade. But when you're internalizing these experiences, that's when you know there's a deeper level. It requires a deeper level to sort of get your way around trading. That brings you to a higher level of consciousness or a new reality about how the market is. Yeah. And in this point, you have responses that are second to nature. You've understood, you've learned by experience, you've attempted trading, you know that risk management is important. So some of these, the knowledge you acquire within the process becomes second nature to you. Yeah. So you're no longer trying to remember things because it's natural to you to probably use a certain stop loss or adjust your risk management in a certain way. And once you attain that higher level of consciousness, then you're wiser than how you began. And at that point, you repeat the whole process again. And that's the pathway to trading. So it's usually a very structured process of learning and relearning what you're doing at the end of the day.
Exciting. This is awesome. At the beginning, when we're talking about the current reality, just want to throw in something. How did you know about trading? Maybe you saw something driving a very big car and they're saying that they got it from Forex profits. Or someone is already making a lot of money and they're successful. So that is them. And you need to be grateful that they told you about the markets or you're able to learn about the opportunity. Then it's up to you now to go through all this process, explore, develop the model, take time to internalize the experiences. Then you have that higher level consciousness or conscience. Then you have the wisdom in the markets. All this is the process. Allow yourself to grow into trading. Now, learn how to calm down when under pressure. How do you get pressure when you're trading? Remember, once you enter a trade in the market, you either get a profit or a loss. So whether it's a profit or a loss, you need to learn how to embrace all of them. If you cannot embrace the losses, if you cannot embrace the losses, then from the word go, you can't even start that business. Okay.
Exactly.
So if you cannot take the losses, then even profits are going to be very difficult because you're going to be unrealistic. In the next point, one of the points will be speaking about being realistic. So
exactly. And one of the things also is that I think I've seen this, the difficulty transitioning between a demo account and a live account. Because now there's the added pressure, the risks are there. And that's where this really comes into play.
Yeah. So what you need to learn is there are risk involved, there is loss, and there's likelihood of profit as well. So the best way to overcome this fear is being able to know how much risk am I in already. Yes, you're in risk, but then how much risk am I in? That's why you need to calculate the risk in the market. How much loss am I getting? How much loss am I likely to get? How much of my money is exposed? Yeah. So if you know, for example, if you're about to make a decision, these are some of the questions that you ask yourself. What are the benefits that I'm going to get out of this? Okay. And even before I start, what is the worst which can happen? In our case, when you're trading, the worst which can happen is the situation of the loss which you're likely to make. And that is the risk which you're taking. So long as you know how much you're likely to lose, then you're going to be prepared. You enter in a trade and there's no much pressure.
Yeah, I think the biggest fear that traders have is realizing the risk. You know, someone can say they have a risk management of 2%, but are they actually willing to risk that 2%? You find that if they're in a trade and it's in a loss, then what happens is they start adjusting their stop loss, or they start doing funny things because they've not really internalized that they're actually comfortable with 2%. And that's where psychology is important, because you can decide, yes, it's, for example, 2% risk, but you've not really come into terms with that. You're not really willing to risk 2% or 1% or whatever you've set for your target. And that's where the problem comes in. And that's why psychology is very important.
Yeah. So that one takes us to the next point. We're talking about having realistic expectations. So if you cannot accept the loss, then you're not realistic at all. This is not a market where you will come and start. Once you enter a trade, you are 100% assured that you get a profit. So it's not some kind of get rich quick kind of a scheme. It's not a shady investment. Trading is a real business. Yeah, it's not a shady investment where someone just have to put their money and it just grows. Yeah, anything which is real has got both sides, advantages and disadvantages. So just have realistic expectations, accept losses, but then also embrace the aspect of gradual growth. I like giving an example of a profession. If I know, even to our viewers and listeners, you're a profession in some sector, or there's something which you do so well. You didn't wake up one day and you are a very good football player, for example, like Messi, or you didn't just get out of school and straight into a hospital and you're the best cardiologist ever. There is a process. So accept the gradual process, be realistic. When you're starting, of course, you want to start on a demo because you don't want to risk your real money right from the beginning. You don't want to start trading. You don't know what you're doing. Be realistic. Start from a demo. On the next step, then go to the real account, but then expect you will struggle a little bit because you're starting. And as you're getting along, understanding the strategies, knowing the best risk management approach, then you become better. You grow into it. So be realistic. On the aspect of realistic as well, it is always good that you know, out of the capital which you have invested, what is the likely return? And of course, you're considering how much you're risking. What is the likely return? You don't expect to put $5 in your account or $10 in your account, and you're expecting to be making a lot of money or tripling that account within a day. It might be possible for some traders if you've got that skill, but it becomes unrealistic because you start taking unreasonable risk in the market. So this is not a shady investment. You need to be realistic. Once you become realistic, everything falls into play because you're able to follow the right steps. Okay, you're able to fall into the growth process of becoming a trader. You're able to put in the right amount of money. You're able to manage the risk properly, okay, and you're able to have a reasonable target. Sam, you have something to add?
Yeah, I think it's important to not understate the value of the term realistic, because when you're coming into the market, most of the times, and I'd say this because the average trader is a very smart person, and I'd have to say that the average trader is a very smart person. But then sometimes we tend to see ourselves as exceptional, that I'm different from the rest, and I might not necessarily struggle like the rest of the guys who are coming into this market, you know. So then that sets a precedence. Exactly, that sets a precedence for a very long journey, a very tough journey, because you're trying to have expectations of these outstanding returns, and in reality, you need a lot of attention to detail. You need time to practice, you know. So
yeah,
that's one thing that's very important to state. You need to have realistic expectations. And once you're able to come to terms with having realistic expectations, then it becomes slightly easier for you because you're able to manage your risk. You're able to be comfortable with how much you're risking for trade and all that.
Yeah, before we move to the next one, I have remembered something. It is a good example. Again, why is it that when someone wants to trade Forex and they want to put their $1,000, that is around 120 1,000 Kenya shillings, for example, you want to put your $1,000 or even $2,000 in trading. Okay, but then you're expecting to make a supernormal profits out of that. But if you were to put the same $1,000 in a business outside there, you'll be very much satisfied with a very small amount of profit. And remember, you're paying a lot of things. That one will help us to be more realistic. Exactly. The amount of money you would use to establish a business outside there, and if you have the same amount of money and put it in trading, you need to ask yourself, the returns I'm expecting from trading, apart from the high, irrespective of the high potential of getting getting a lot of profit because of leverage and all that, the profits which I can get from that amount which I've put in trading, am I willing to accept the same? Am I willing to accept that profit as it would be the case if I had invested it in our normal day business where you go and rent a place and start selling some things? Maybe that one is going to put us into a realistic perspective.
Yeah, that's true.
Yeah. Next, you need to be very confident in your trading, but you watch out not to be overconfident. Yeah, a very thin line of separation, right?
I think this just comes with this comes with the longer you are in these markets, the more you'll understand that overconfidence has to be managed, or confidence has to be managed. Because you can imagine coming off a streak of consistent wins, how you'll behave on your next trade. You're about to put on a trade and you've had maybe 2, 3, 4 wins previously. And then now it alters how you're even approaching the market, because you know you can't lose, so it's very easy. It's a very slippery slope.
Yeah. When we talk about emotions in trading, it's very easy to think about the negative emotions only. Even the positive emotions are dangerous. A trader might think that when I lose, that's when I'm supposed to be managing my mindset. But no, even when you're making profits, because mostly try to observe that at the time when you've been very consistent, you've been making profits and profits and profits. If you're not careful, that's most likely the time you're going to experience a very big drawdown and a very discouraging one. Why? Because of the euphoria which comes up, because of the overconfidence which sets in. So it's good to learn how to balance your trading and have a way of having the profits and losses being normal. If you make profits, it's not luck. It's something you're used to because you're using a strategy. Yeah. And you know what you're targeting. If you made a loss, well, it's normal because it's something that you had already planned for.
Exactly. And I think that's the importance where the strategy becomes very important, because it's detaching you from the emotions and the biases you have in the market. But to some extent, I don't think it's possible to completely eliminate your emotions, but to some extent your strategy carries the major decision-making factor in your trades.
Sure, you can't eliminate, you can just control or manage.
Exactly.
Thanks for that. The next point, be resourceful and be eager to learn. We have an economic calendar, we have events happening. When you're trading, remember those instruments that you're trading on, the gain in value or loss of value is being influenced by economic events that are coming up every single day, changes coming up every single day, geopolitical events coming up every single day. Like when you have, of course, we know countries which are in conflicts, for example, no one knows which is the next country which will be in conflict and how it's going to affect the macroeconomic activities, macroeconomic factors around the world, and which instrument is going to be affected. So be resourceful, read wide, always look at the economic calendar and watch out for the changes, political changes and all that. Yeah, be resourceful. That's how you're able to become better in trading. Okay.
Exactly. I think one thing to note is how the markets were 30 years ago or 10 years ago isn't necessarily how the markets are right now. And I think can attest to this. 2020 saw the largest increase in day traders across the globe. And there are always going to be new things happening in the market. For example, no one knew a pandemic is going to adversely affect the market. So there's always something new coming up in the market. And that's why you need to be willing to learn new things, because at the end of the day, the market is always evolving, just like any other business, be it in IT, be it in real estate. It's always evolving, and you need to be willing to learn for you to keep up with the trend.
Sure. There's a question I got from one of my students when we were doing a workshop, or just the daily workshops which you do. And the question was, Mathew, do you expect that Forex trading will end one day? And it was really interesting. It's around the area of being resourceful. My response was this, that since we are trading on real things which are changing value, and they will never end. We will never stop doing business. People will never stop traveling. We cannot have the exchange of these instruments stopping. But I said, maybe what can change is the way of trading them. Okay.
Probably.
In terms of technology, for instance, in terms of the approaches. So nowadays we have people trading using algo, and we are still doing the normal manual trading. So if you keep being resourceful, then you're likely to learn new ideas and new instruments coming up and new trends coming up in the market, not only in terms of how it's affecting the strength of an instrument, but in terms of new ways of being a better trader in the market.
Exactly. At the most fundamental level, the markets exist to transfer risk. Yeah. And as long as there's an element, as long as there's an element of risk in whatever asset, be it currencies, there'll always be someone trying to take advantage of that. So the markets have to exist for that specific function. That's why I think it's going to exist in the foreseeable future.
Yeah. Okay. In our next point, talking about discipline. Discipline is just the ability to observe your rules. Yeah. If you have a strategy, keep to your strategy. You have a way of doing your trading, keep doing it, stick to your rules, but then you can keep on updating them in such a way that you don't overhaul your whole approach. So one should be careful when you're talking about the discipline. Doesn't mean that you keep stuck to one trading strategy and things are changing. You want to integrate them, but in a very seamless way, such that you are able to you're able to maintain your trading strategy still, but keep in some changes which are coming in. So trading strategy will give you success with the discipline. Earlier on, Sam, you had mentioned about people who would put a stop loss and then they start changing it again, increasing the amount of risk. That's just one of the simple pointers of a trader who is not disciplined. You put you have a trading strategy. You're going to wait longer before you get a signal. Then you start looking for other trades which are not part of your trading strategy. That is one way you're breaking your discipline in trading. You've put a stop loss, but then after some time you even do away with it. Then you're breaking the cycle of discipline in your trading. It's just, in a very simple way, discipline is where once you put the rules that you're going to follow, stick to it, okay, and in the long term, you're going to find success. Or if you don't find success in it, then you're going to find the mistakes that you're doing through consistency, and then you can change them.
Yeah, exactly. I think it's the ability to stick to a certain procedure that you've put in place that you're intending to follow. And I think it's far more important than how smart you are as a person. Because at the end of the day, if you separate the person with the structure, then you're able to assess the structure, the set of rules that you've put in place and how effective they are. And that helps you grow. If there's something wrong with a certain rule you've put in place, then you can improve it. Other than that, trading haphazardly, no matter how smart you are, might not necessarily lead you to where you want to get, because there is no sense of progress. Because if you are doing things randomly, then it becomes very difficult to know where you've started and where you're going. That's why discipline is very important in this case.
Awesome. The next thing is patience. This market needs you to be very patient. Actually, not only in trading, but even right from the first point which we talked about, the growth mindset. If you're not patient enough, you get into trading within 1 week, 1 month, you rush things, you lose money, and that's how the story ends between you and trading, because people will start saying it's scam. Yeah. So patience will come. We want to observe patience right from the start. Yeah.
Exactly. Yeah. Because a lot of people give up in the first or the second step in that cycle you had. Immediately you start exploring the market and you see there's so many things to learn. It's so difficult, and then that's where you give up. So a lot of people give up in that first stage.
Yeah. So the mistakes, maybe I can point out the mistake here that traders do, or people do when they are starting up. You've gotten the idea of trading, you've seen that people are earning money through it, and you want to start. But then you don't want to observe the process. You don't want to be patient enough to learn. It is okay to take the first step to create a demo account. It is okay for you not to know even to log in and understand how to log in. It's okay to take a day and understand how to enter a trade. Follow the process, be patient, grow in the process. Yeah. The problem that you have is that traders want to be successful very fast. Within a very short time, you want to go and start earning money. The reason why someone fails is it's not because it's something very hard. It's because you're not giving yourself time to understand what you're doing. Of course, if you're into something, you don't know what it is. You don't understand its structure. You don't understand how it works. You don't know how the market behaves. You don't know what influences it. You have not even taken time to understand it. Then how are you going to be successful in it?
Exactly.
It's like, yeah.
And the biggest danger is not knowing what you don't know. Because you never know until you experience it. Yeah. So
exactly.
You think when you start out, you think this is all you need to know. And once it becomes difficult, then you've given up. But then probably there are things you don't know that you need to know. That's the truth.
So,
yeah.
It's good for traders to cultivate the habit of waiting for the right signals. When you have a trading strategy, be patient with it. If you make hasty decisions, you're likely to make mistakes. And this one is even a live, it's like, it's what do you call them? It's one of the live, is it life skill? That if you want to make a decision, apart from certain circumstances where you have to make a very fast decision, but if you have to make hasty decisions, then you're most likely to make some mistakes, unless in some situations. But in trading, just take time, do the market research, do analysis, wait for the signal.
Some things become more apparent with time.
Yeah, sure. So I think that's the last point we were discussing. Okay, today we had to do it a little bit different. We've been into charts, been into tools of analysis, into strategy, and we saw it important as well to talk about the biggest tool behind the execution of all those tools. Yeah, if your mind is not upright, however good your analysis method is, however strong your strategy is, however good you are in your risk management, then you're going to lose. You lose the game. So you need to get control of the mind. Okay.
Yeah, you need to have a connect between the mind and the strategy. So in this case, if you have a disconnect, then you find yourself following your strategy, but in the middle of a trade, you're doing something totally irrational from what you had planned to do. And that shows you that there's a disconnect between the two. So when you're developing your strategy and your knowledge, you're also developing your mind. For instance, the idea of risk that you've talked about, being comfortable with a 2% risk is different from planning for a 2% risk. Because most of the times you find traders midway into the trade, they've already adjusted their stop loss, or they're just panicking because of a stop loss they set.
Yeah, sure. So I think we'll leave it there. Maybe wish everyone happy holidays for the ones who are going for holidays. We'll continue having these sessions. Okay. So with that, or those many words that we talked about, trading psychology.
Yeah.
Thank you so much.
I think
Take care.
I think going into the holidays, it's a good time to reflect. Just take some time and just reflect on the markets, reflect on your psychology, and it really helps when starting the year, on a fresh note.
Yeah, and telling traders, do not forget to wait for the Santa rally, Santa or Sena rally.
Yeah. Actually, on Friday we have very important news coming. I think it's COP-PCE, if I'm not wrong. And that might catalyze the Santa the Santa rally during
All right.
Christmas.
All right. Thank you so much, guys. Enjoy your evening and have happy holidays. Thank you so much for your time. See you in our next session. Bye.